Good day. Before we begin our webinar, I'd like to do a very quick sound check. Heather, are you able to hear me?
Yes. Welcome.
Great. Okay, great. Thank you so much. I'll go ahead and begin the webinar. Thank you. So hello, everyone. I'm Vicki Healy with the National Renewable Energy Laboratory, and I'd like to welcome you to today's webinar hosted by the Clean Energy Solutions Center. Our discussions today are focused on assessing private capital for clean energy investment in developing countries. We are very fortunate to have a great panel representing the Climate Technology Initiative Private Financing Advisory Network, otherwise known as CTI-PFAN, presenting today. Next slide, please. One important note of mention I'd like to make before we begin our presentations is that the Clean Energy Solutions Center does not endorse or recommend specific products or services, and the information provided in this webinar is featured in the Solutions Center Resource Library as one of many best practices resources reviewed and selected by a range of technical experts. Next slide, please. So before we begin, I'll quickly go over some of the webinar features and a few housekeeping items. For audio, you have two options. You may either listen through your computer or you may listen over your telephone. Now, if you choose to listen through your computer, please select the mic and speakers option, which is located in the audio pane to the right-hand side of your screen. And by doing so, we will eliminate the possibility of feedback and echoes. If you select the telephone option, a box on the right side will display the telephone number and your unique audio pin that you should use to dial in. We ask that you please mute your audio device before the presentations begin. And one important note, if you have technical difficulties with the webinar, you may contact the GoToWebinar's help desk at this phone number, which is 888-259-3826, and they will be happy to provide assistance to you. Next slide, please. So we have a couple of features on this webinar platform, and we welcome you to introduce yourself, and you may do so by typing into the chat pane, which is located on the screen, again in the right-hand pane of your screen. And I've actually typed in a little note already that you may see within the chat bar. And if you would like to ask a question, rather than using the chat function, we ask that you use the questions pane where you may type in your questions. And if you're having difficulty viewing, this is one important note. If you're having difficulty viewing the materials through the webinar portal, you may find PDF copies of the presentations at cleanenergysolutions.org/training. And we have PDF copies of the presentations at that particular URL, and where you may follow along as our speakers present. Also, I'd like to note that an audio recording of the presentations will be posted to the Solutions Center training page within a few weeks. Next slide, please. So we have a very exciting agenda prepared for you today that is focused on dispelling the myth that clean energy projects in developing countries cannot be implemented with private debt and equity. Our panelists will highlight their achievements working with project developers and other project proponents to help structure the clean energy project and the associated business plan to attract investors and reach financial closure. We are fortunate to have Elmer Holt, CTI-PFAN Manager and Chair of the CTI Executive Committee. We also have Peter Story, who is PFAN's Global Coordinator. And we have Taki Kuroto at CTI-PFAN Secretariat and also Chief of Program Secretariat. Before our speakers begin their presentations, I will provide a short informative overview of the Clean Energy Solutions Center initiative. And following the presentations, we will have a question and answer session and wrap up with discussion and closing remarks. Next slide, please. This next slide provides a bit of background in terms of how the Solutions Center came to be. The Clean Energy Solutions Center is an initiative of the Clean Energy Ministerial and is supported through a partnership with UN Energy. This initiative was launched in April of 2011 and is primarily led by Australia, the United States, and other SIM partners. Some of the outcomes of this unique partnership include support of developing countries through enhancement of resources and policies relating to energy access, no-cost expert policy assistance, which I'll discuss in just a few moments, and peer-to-peer learning and training tools, such as the webinar you are attending today. Next slide, please. So the Solutions Center has 4 primary goals. First, it serves as a clearinghouse of clean energy policy resources. It also serves to share policy best practices, data, and analysis tools specific to clean energy policies and programs. The Solutions Center delivers dynamic services that enables expert assistance, learning, and peer-to-peer sharing of experiences. And lastly, the Center fosters dialogue on emerging policy issues and innovation occurring around the globe. Our primary audience is energy policy makers and analysts from governments and technical organizations in all countries, but we also strive to engage with the private sector, NGOs, and civil society. Next slide. So a marquee feature, this is something I mentioned that I would talk about. A marquee feature that the Solutions Center provides is expert policy assistance. We have affectionately named it Ask an Expert, which is a valuable service offered through the Solutions Center. And we have established a broad team of over 30 experts from around the globe who are available to provide remote policy advice and analysis to all countries at no cost. So if you have a need for clean energy policy assistance, we welcome and encourage you to use this very useful service. And again, this assistance is provided free of charge, and it is available to all countries on both national and subnational levels. It's very easy to request assistance. All you really need to do is submit your request by registering through our Ask an Expert feature at cleanenergysolutions.org/expert. And we also invite you to spread the word about this valuable service to those in your networks and organizations. Some of the broad sectors covered by our experts include energy access, energy efficiency, renewable energy, smart grid and microgrid, clean transportation, and also regulations and utilities, policies for them. So next slide. And some of the ways that you can become involved and learn more about the Solutions Center services and resources we encourage you to explore, first of all, and take advantage of the Solutions Center resources and services, including the expert policy assistance. You can subscribe to our newsletter and participate in our webinars. And we also welcome your suggestions and recommendations on what you would like to see included on the Solutions Center that would enhance our value to the clean energy policy area. Your feedback is always welcome, and we're looking always for ways to improve and add value to the Solutions Center services that we provide. Next slide. One other feature that we have is that the Solutions Center has is a policy forum that is very informative, and we encourage you to go to the policy forum page and read and comment on blogs and articles that are located on that particular page. And on our policy forum, you'll find many interesting and informative articles discussing progress of clean energy policy development and implementation occurring in countries around the world. And we also follow similar blogs that are posted by our partners at the Renewable Energy and Energy Efficiency Partnership, Leonardo Energy, and we also feature podcasts that are developed by Bloomberg New Energy Finance. They're very dynamic and informative, and I encourage you to explore those. Next slide. So now I would like to take this opportunity to introduce our distinguished distinguished panelists. And first, I'm pleased to introduce Elmer Holt, who is CTI-PFAN Manager and Chair of the CTI Executive Committee. Next slide. And we are also joined by Taki Kuroda. I am sorry, I mispronounced that, Kuroda. He is CTI-PFAN Secretariat and Chief of Program Secretariat. And next slide, I am very happy to say that we have Peter Story, the PFAN Global Coordinator, with us today. So without further delay, I will now turn the webinar over to Elmer Holt. And Elmer, welcome.
Thank you, Vicki. Thank you very much, and thanks for those who have already logged in to this webinar. We're very pleased to be here to sort of tell you a little bit about the CTI and the CTI Private Financing Advisory Network and some of the strides we've made in so far and where we're headed in the future. Next slide. Our presentation is basically structured in three parts. First part, I'll give a little background on CTI and some of the evolution of the CTI-PFAN. Then Mr. Peter Story will talk about some of the specific services the CTI-PFAN offers, and some of the projects we've had, and some of our efforts into the world of adaptation, along with some of the lessons learned. Then the third part of our presentation will be Mr. Taki Kuroda, who will talk about some of our financing forums and how that process works and how it goes to identify effective projects. The next slide. To give you a little background on the CTI and CTI-PFAN, the origin of the Climate Technology Initiative actually goes back to 1995, when it was launched at the first Conference of the Parties in Berlin as a voluntary initiative by 23 OECD countries and the European Commission. Our objective at that time being to support the UN Framework Convention on Climate Change by facilitating the more rapid development, adoption, and diffusion of climate-friendly technologies and practices. In 2003, the CTI reorganized as an implementing agreement under the International Energy Agency. Currently, the CTI has 11 member countries, which include Austria, Australia, Canada, Finland, Germany, Japan, Norway, Republic of Korea, Sweden, the UK, and the US. Since its reorganization, the CTI continues to have its major focus being technology issues and activities related to the UN Framework Convention on Climate Change, and its overall objective also continues to be to promote the more rapid development and diffusion of climate-friendly and environmentally sound technologies through multilateral cooperation among the private and public sectors. Since its founding through the present, one of CTI's comparative advantages has been the effective engagement of the private sector into the international climate change process. As you will see shortly, the participation of the private financing and business communities has been a key factor in forming and building CTI's private financing advisory network, known as CTI-PFAN. But it is not just the private business and finance sectors with whom we work. We work with a broad range of government, non-government, multilateral organizations, and others in the course of our work. Two of the strongest and longest relationships have been through CTI and the UN Framework Convention on Climate Change Secretariat, along with the UN Environment Program. A sampling of some of the other groups is listed at the end of this slide. Additionally, we work with individual businesses and business associations to ensure full understanding of the private sector perspective. Next slide, please. In the course of the CTI conducting its various training, capacity building, joint industry seminars, and related activities, we heard a consistent message from those with whom we worked. That was that the impediment to technology transfer was a lack of money for project implementation. Further, it was clear that there was insufficient public resources to adequately address the clean energy needs of developing countries. In any event, there was a need for expanded public sector engagement. These and other considerations moved the CTI, in cooperation with the UN Framework Convention Secretariat, and the expert group on technology transfer to convene a workshop during 2004 in Montreal to explore innovative ways to finance technology transfer. This was truly a watershed event that brought together a diverse group of interest, including government, non-government, private business and finance, and other representatives. That group discussed the issues and what both sides, the private side and the public side and the project side, what they expected from one another. It gave us thought that possibly something that was needed was something a little different, and we reached the conclusion at that workshop that it wasn't a shortage of money and it wasn't a shortage of good projects. What it was a shortage of good finance supported clear project proposals that were able to articulate the positive aspects of the project to the investment community and meet the international finance standards. From that point, we worked for a year with some projects to see whether or not this idea of coaching the project developers and structuring and fine-tuning their project proposals was beneficial. And in Bonn in 2005, we met again. And it was at that session that we concluded that there was merit to this process, and the CTI-PFAN was born. Basically what it does is it sort of brings the project side, matches them up with the investment side. And of course, we bridge the gap between the money and the projects, as we say. Next slide. From a diagram standpoint, you can see on the left-hand side are the coaching and mentoring of the project developers and other project proponents who are seeking financing. On the right-hand side are the groups that are seeking investments. Getting those together and be able to shape those project proposals so that they adequately communicate the positive aspects of the project are important. Next slide. Now, as far as the basic elements that the CTI-PFAN consists of is that it's a multilateral activity involving the CTI countries. The ICET, which stands for the International Center for Environmental Technology Transfer. REAP, which is the Renewable Energy Efficiency Partnership. And another major player is the U.S. Agency for International Development in the U.S. The network consists of actual practicing financial professionals that understand the markets, the technologies, and the regulatory environments. The whole idea, again, is fully consistent with that of the CTI in that it's to accelerate the technology transfer and diffusion under the framework convention process. Again, the type of investors and participants we like to attract are those that we refer to as the triple bottom line, who not only look at the financial returns, but the environmental and social returns as well. Next slide. Sort of to impress you with the breadth and depth, along the top line there are the CTI funding partners, which I mentioned just a few minutes ago. Followed by, down below, is that the CTI network members, again, which are practicing financial professionals who understand just about every region and technology around the world. Next slide. Not going to go through these in depth, but in addition, we have a group we refer to as our resource partners, which we engage with in a variety of ways, sometimes as actual investors in some of the projects. Next slide. As far as our track record so far, we're very proud of the fact that 34 projects have reached financial closure with about $412 million in investment raised. These projects basically have the ability, when they're fully implemented, to reduce greenhouse gases in the form of CO2 equivalent by about 1.8 million tons per year. In addition, we have a project pipeline where we're on an ongoing basis working with these projects to move them closer to financial closure. Currently, that pipeline has about 164 projects in it, representing about $4.9 billion of US dollars of investment. Again, with significant CO2 equivalent reduction of about 7 million tons per year. Next slide. To give you a sort of little perspective as far as technology and region, in the pipeline on the left-hand side, as you can see, are the percentages broken out by region. We're a little heavy on the Asia side, but that's just been the way some of our resources have been applied so far. We have additional resources that we're going to be more widening the participation in Africa and Latin America. From a technology standpoint, over in the lower right-hand corner there, you can see that a diverse group of clean energy technologies have been identified, and of course, on the biomass, biogas, biofuels area, that's a significant share of the total. Next slide. As far as the closed projects on technology, you can see there, again, a equally diverse group. Next slide. And again, on a regional basis, as you can see, Asia and China take up more than half, but Latin America and Africa will be growing. Next slide. Now, prior to 2012, our principal focus was on mitigation-related projects. With the growing interest in adaptation, we determined that we should see whether or not the CTI-PFAN paradigm, the approach, the methodology, could be applied to adaptation-related projects. So to explore that, we convened a workshop in Nairobi earlier this year, and it was quite successful, in which we explored the issues associated with applying the CTI-PFAN methodology to adaptation-related projects, bringing together folks from mostly the African region, but other places as well, multilateral banks, various key players in the world of climate change. And as I say, we found that many times there's the opportunity for adaptation-related products associated with some of these projects, so that there is a cash flow stream that provides some investment opportunities. So far, the results are encouraging. We're working with a set of projects, and we're going to report back by mid-next year in terms of our success. Next slide. At this point, I'm going to turn it over to our global coordinator, Peter Story, to pick up now with some of the specifics on what the services are offered by the CTI-PFAN. Peter?
Thank you, Elmer, and good morning or good evening to everybody, depending on where you're listening in from. As Elmer mentioned, I'm now going to walk through some of the more sort of detailed services that we provide. And what you've got on this slide is a representation of the main two services, which are the sourcing of equity and debt, and the financing facilitation approach. And essentially, what we've developed is a methodology that walks through project identification, starting there on the left. We go through quite some effort to identify the projects and to make sure the projects are complying with our own criteria, which I'll come back to in a little second. Having identified them, we assign a coach from one of our consultant network members to work with the project. The coach then helps the project hold its hand, if you like, to develop a bankable business plan, an investor presentation, and what we call the project data sheet. And that's very important because that essentially is one of the key interfaces with the investor. It encapsulates all the key data of the project and enables us to sort of start a dialogue with the projects. When that's ready, we start introducing the project to the investor, and we have two methods of introduction: either sort of an individual introduction to investors, and that can happen at any time, or we go through an investor forum, a clean energy financing forum, in which case we showcase a number of projects to a group of investors all at one go. Now, the only two differences between those approaches is that one is an open time cycle and can happen at any time, and the other one goes through a compressed time cycle where we work through a call for proposals, identify a group of projects all at one time, and then showcase to investors in a room in an investor forum environment. But the main goal remains actually to move the project towards financial close and actually achieve financial close to get the money flowing into the project and investment happening. Next slide, please. So these are the criteria that we work with. We're essentially looking for projects that are commercially viable. Obviously, we need technical viability as well. As Elmer mentioned, we're looking for a GHG reduction potential. The projects need to have a very strong management and competent management team, and if we can also hit other development benefits in terms of MDGs, then that's something that is rated positively as well. Generally, we look at a project within sort of a $1 to $50 million US total investment range. We can look at smaller projects, and indeed about 10–15% of our portfolio is dedicated towards micro projects of under $1 million in size. And as you saw from the slides that Elmer showed in terms of what our pipeline is made up of, we work with a wide variety of commercialized technologies, and I suppose the important thing to say there is that we're technology neutral. It doesn't matter where the technology comes from, whether it's north, south, east, west, as long as it works, we're able to work with it and generate financing for it. Next slide. This is just a picture of where we're active at the present time. The red shows countries and regions where we have existing networks and operations. The blue are those countries and areas where we're expanding into at the moment. Essentially, we've divided the world up into 5 regions. So we say that we operate through 5 regional networks in Central America and the Caribbean, Latin America, Asia, and then in Africa we have West Africa, East Africa and Southern Africa as sub-regional networks, and finally the newest network at the present time is Central Asia and the CIS countries. Next slide, please. Now what we mean when we say we've got a network, it means that we've actually got dedicated resource on the ground. We have identified network members, either consultants or investors that are working and active in those countries. Those are the logos that Elmer showed you earlier. We have a coordinator in each of the country networks, and then above the coordinator, a regional coordinator, which supports the network operations. Overall, in those networks, we have 60 network members at the present time. Those network members actually sign into an MOU, so it's a little bit more than a tacit understanding. It's an explicit agreement between us that we will work together on projects. We also have a number of affiliate members that we work through and with. They, for whatever reason, don't sign into the MOU, but we know they're active in the space. They tend to be the larger corporations and banks which have difficulty for corporate reasons, perhaps signing into MOUs. And we also work through resource partners, and these are important. They tend to be development banks. They tend to be government agencies such as rural electrification agencies, or the ones I've given you there are the Energy for All partnership of the Asia Development Bank, the Confederation of Indian Industry, the Indian Wind Energy Association, and the Development Bank of the Philippines. And these institutions and agencies really help us to align ourselves with government policy on the one hand. They plug us into local markets and local networks, and in some cases also provide resources and investment for us, as Elmer mentioned. The areas that we're expanding into currently are Southern and West Africa, and also the Central American, Caribbean, and to a lesser extent, as you'll have seen, we're already very well covered in Asia and Southeast Asia. Next slide, please. Just to mention the expansion in Asia, We have relaunched a dedicated network in the Philippines. The work on that started in September earlier this year, which gives us expansion of our dedicated project development capacity. There are also going to be country events coming up in the Philippines, including a financing forum, capacity building and technology transfer workshops. Later this year, early next year, we'll be starting a major scale-up of the regional network, reinforcing the existing country networks in India, Indonesia and Thailand, and also then going into new countries in Cambodia, Laos, Malaysia, Vietnam, and also in due course into South Asia, Bangladesh, Nepal and Sri Lanka. And the aim of that particular activity is to leverage somewhere in the region of about $1 billion of investment over the next 5 years or so. Next slide, please. I thought it would be useful to give you some idea of the sort of projects we work with, and here are 2 projects that we've worked with in the past and raised money for. The first one is a biomass power plant in the Philippines using rice husk as its feedstock. It was a 4-stage project, and we helped raise $30 million of financing for the first stage of development to develop the first 12 megawatts of capacity. PFAN helped with the whole development of the business plan and the financing structure. In particular here we helped develop an innovative project structure to involve the farmers and the agricultural companies that were supplying the feedstock to participate in the equity of the project, thereby actually securing the feedstock supply and ensuring the success of the project going forward, because as you will know, one of the key to biomass type projects is the feedstock supply. It's one of the biggest concerns that investors have, and that particular structure gave great comfort to the investors. The other project I've mentioned here is a waste to energy project in Thailand, working on the processing of municipal solid waste via anaerobic biodigestion to produce biogas and then generate electricity. Here we raised $5 million of expansion capital to expand the anaerobic digestion facilities and also to set up a gasification line for the processing of the solid waste and the non-organic component of the waste stream. I think the great thing about this project is that it has and demonstrates 4 revenue streams, making it a very strong proposition for the investor. Based on the success of that first plant, we are now working with the developer to replicate the project across Thailand, looking at 5 sites currently, all about the same sort of size that you see there, and a further 5 sites in Thailand from about 2 years, 3 years out, and potential sites in Laos as we go forward as well. Next slide. Here are some other project samples that I thought would be useful to show you, showing you some of the extent and the scope of the sort of projects that we tend to get involved with. We're seeing a lot of rural electrification projects at the moment, or rural lighting projects for the distribution of solar panels and solar lighting kits. Here the interesting thing is the sort of business model that attacks the bottom of the pyramid, looking at very poor rural communities that are obviously off-grid and suffering from energy poverty, and working with very innovative distribution models to get to those communities and get to those markets. But it's a huge market. Some estimates put the value of that market at about $20 billion a year on current analysis. We also see projects in the agricultural sector, sort of productive use of energy to support farming activities. We're seeing a lot of clean transport projects come through in the development of urban transport systems, particularly in Southeast Asia at the moment, for using e-trikes to replace existing taxi and informal transport services. Most recently, we've seen a very interesting and innovative model for the bundling of small hydro projects in Indonesia. And it's interesting now to see that these sort of bundling efforts are coming through to build on the development work that smaller developers have already performed in markets, to bring projects together and importantly to give them the investment scale that investors are looking at. And scale is one of the things that is a key criteria in looking at these things, because investors tend not to be interested in investing in small one-off projects for obvious reasons of transaction costs and return. We also, but to a lesser extent, look at technology development projects, and some of the more interesting ones that we're seeing at the moment are in the space of wave energy. We're working with projects from Finland, looking at opportunities in Africa, and also with the technology development in Singapore at the moment, which are developing wave energy. We've seen a roadway power generation system, which is essentially optimizing compression technology used in road surfaces to generate electricity. Another area that we've had some success in raising money for is new technology, new milling technology, and new pelletization technology for biomass. So quite a large range of projects that we get involved with. Next slide, please. Drawing some of the lessons that we've learned from looking at these projects, and Elmer mentioned that we've got some 164 projects in the pipeline at the moment. Now, to give you an idea, to get to those 164 projects that we're actually working with or have worked with, we've probably looked or seen and analysed and scoped somewhere in the region of, I would guess, getting on for 700 or 800 projects worldwide in the meantime. So we're quite choosy in the sort of projects that we look at. But that has given us a very good insight into what works and what doesn't work. And some of the things and conclusions that we've drawn from that is that, the thing that drives these things is not so much the technologies, but the business model that unite and integrate the technology to deliver a service or project which is needed by a particular community, and most important is affordable by its targeted customers. And it's affordable in a way that replicates their initial and existing cash flows. And that was the reason I gave you the example of the lighting models just a minute ago on the previous slide, because what these models have done is to replicate existing expenditure on things like kerosene or candles and batteries, so that instead of trying to sell hardware or technology per se, what they're trying to sell is a service or a unit of electricity, a unit of lighting, in the same way that a utility sells kilowatt hours to us in the more developed world. And those models are proving very, very successful. I think the other thing that we've seen is that there's a great need for capacity building with investors. Investors by their nature are risk-averse and conservative institutions. And one of the things that we've been working on is to sort of push them towards the understanding of new technologies, to help them understand the risk of those technologies and models and feel more comfortable with them, to help drive investment into the new areas. Against that background, we're also seeing an emergence of what we've deemed or termed the specialist impact investor. And these are the triple bottom line investors that Elmer mentioned earlier, where they're looking for not just a financial return, although that remains important and paramount, but they're looking for other social and environmental benefits as well. Part of the problem in this area is actually trying to quantify and validate those accruing impacts. And what we're seeing as a result of that, the establishment of specialist exchanges and intermediaries such as IIX in Asia and NEXI in Africa, to establish platforms and exchanges to help that validation process, and to facilitate investment flowing through to the projects and to facilitate investors' involvement in these markets. And of course the PFAN consultants themselves get involved in that process in helping validate and confirm the benefits of projects. Finally, very important to note that the enabling environment in all of this is key. We see a very strong correlation between jurisdictions and countries that have good enabling environment and regulation and the projects that we close. A couple of examples of that are in Mozambique, where we signed a deal the day after biofuel mandate legislation was enacted, and in the Philippines, where we worked with the Energy Ministry to tweak some regulation that was being enforced poorly and which was holding up a number of projects to preventing them actually going through to achieve financial closure. So regulation is key, and we can't stress that enough. Next slide, please. Elmer mentioned that we're increasingly starting looking at adaptation, and this is something I'd just like to walk you through. Most of the work, as you have seen, really concentrates on mitigation, but since earlier this year or late 2011 we started looking at adaptation, whether the methodology that we've developed can also be used for adaptation related projects. We started with a background paper. That paper is available at the link you see there on our website. We brought together various stakeholders from the public, the private, the project developers, and other stakeholders in a workshop in June 2012 to help frame the issues and help us understand better what challenges adaptation poses, and to start the process of project identification and development. And that workshop led to us being able to identify 5 projects, 5 adaptation-related projects that we're now working with in a pilot program that we hope is going to throw some light on this process and help us then in due course put together a larger mainstream activity for being able to support and facilitate finance flowing into adaptation-related projects. Next slide, please. I think sort of based on the work that we've done so far and what we've seen, and as I say, this is very early days still in adaptation, what we're seeing is that there is a general lack of understanding and experience in the adaptation space, both on the public and the private sector side. That is making project identification difficult. People just don't understand yet what adaptation really entails and how it can be used to generate interesting project opportunities. That's particularly so for the investors. One important thing that came out of the workshop was the realization, or really the statement from the investment community, that they are not so focused on a definition between adaptation and mitigation. They really don't care what we call it. They will invest into projects if they can meet their risk-return criteria, and to that extent it's very important for us all to be able to understand, manage and price those risks, and if they can hit and meet the other benefits and targets that they want that are driving their particular investment profile. And this again underlines the importance of the role of impact investors, particularly in adaptation, I think. But again, they're still having this difficulty in quantifying and validating the accruing development and social benefits that they're needing to see. Generally, in the adaptation space, we see that there's an even greater shortage of seed capital than there is in mitigation. The lack of collateral and guarantees is a problem for project developers, and they're having to deal with creating passive investment structures to get around the fact that they're often working in spaces that and areas where the underlying assets and services are really taking place and situated in a public sector space or in a public goods space, which has been previously dominated by the public sector, and that is presenting challenges in putting investment structures together where the private sector is involved. So you're having to put proxies together for ownership of assets to prevent outright private sector ownership, where there's sensitivity around those sort of issues and things like that. That leads to the need and requirement for blended finance, where we're using both donor financing and private sector financing, and also innovative public-private partnership type models that we think will be key to supporting adaptation-related investment as we go on. Next slide, please. In terms of the target sectors that we're looking at in the adaptation sector, I'd just like to give you the overview here, because it sort of goes beyond the pure energy sector that we look at in mitigation. So, of course, access to energy is an important area. We're also looking at projects in the agriculture and agribusiness sectors, water and sanitation, forestry and ecosystems. And we've identified some cross-cutting sectors and coping mechanisms, particularly the urban development area, microfinance and microinsurance, where we feel that we're going to be seeing lots of project activity that will be available for private sector finance. Next slide, please. Elmer mentioned some of the other institutions that we work with. I'd just like to focus on a few here to give you an idea of the scope of the cooperations that we are currently engaging. We're working with UNEP on TNAs, looking at how projects can be brought out of the technical needs assessments, technology needs assessments, the NAPs, the NAMAs, and feed them into the CTI-PFAN process. We're working with the UNDP activity called SSGate, also as a project source, with the Climate Innovation Centers of the World Bank and InfoDev. Of course, we cooperate very closely with the IEA technology platform, and more recently we're also working with a partnership in Africa and the Caribbean called the Energy and Environment Partnership, which is an initiative of the Finnish, Austrian and UK governments. More specifically going forward, we are looking at how we can support the UNFCCC now that the architecture is becoming clearer as to the way forward, and specifically we are looking at how we can interface with the Climate Technology Centre and networks, on the basis that CTI-PFAN has been endorsed as a useful mechanism for financing technology transfer by the COP in the past. Next slide, please. What I'd like to show you in this slide is how we envisage that cooperation potentially working. There you see projects coming out of the CTC and N or the UNFCCC process. They could be coming to us through technology needs assessments, through NAMAs or NAPs. It doesn't really matter. But we would then subject them to an initial early stage analysis whether those initiatives can be financed, whether they do have potential in the private sector. If so, then we would start working with them in CTI-PFAN to help them help their development and move them towards financing in the private sector. Those projects that are not capable of raising private sector finance for whatever reason, but are strong projects in meeting other development and environment criteria, they would remain in the donor and the public-driven sector. And in the middle, we'd obviously potentially have this area of public-private partnerships and blended finance where we've got both aspects. And this we feel is going to be a very strong model for optimizing resources as we go forward, and to make sure that we really do maximize the potential of both groups and both sets of financing, and to speak to their strengths in the interest of really optimizing the very scarce public sector resources that we're all confronted with at the moment. Next slide, please. I think you'll be having a strong idea in the meantime as to what the opportunity for interaction from business is. Essentially, we're open to project proposals from project developers. They can be submitted at any time or through one of our calls for proposals. I think PFAN is a strong business development and support tool for technology suppliers wanting to get into new markets in developing countries as they look to sell and propagate new technologies coming through. Obviously, it's also a very strong tool for the consultants and investors that are working in these areas and regions. And for the investors, we're a source of deal pipeline, which is crucial to their business development as they look to expand their activities. I think PFAN helps provide a stamp of credibility at a number of levels, commercial, technical, and also environmental and sustainability. That's something that is reinforced with all the interactions that we have with our various stakeholders. And most importantly, we provide this service free, and we're able to do that through the very generous support of our funding partners. Those are the partners that Elmer mentioned at the beginning, the CTI countries, ISET, USAID, REAP, and so on. Next slide, please. In terms of the benefit for donors, we get a very high rate of return for every dollar that our funding partners provide to us to help us perform our services. We generate, and I emphasize that it's at least $100 of financing. I've given you the example there of one of the REAP activities of $140,000 of financing leading to about $18 million of investment. In addition, we've got automatic leverage built into the PFAN business model in the sense that the consultants contribute their services at a discount to their normal market rate. I think PFAN is a successful and functioning public-private partnership model. It's producing tangible impacts on the ground, and particularly through the Clean Energy Financing Forum that Taiki is going to be talking about in a little bit more detail in a minute. We generate quite a lot of visibility in the markets that we work in, and it's proving to be very popular with all the communities that we have contact with. Next slide, please. Just to summarize, this is where we see the added value of CTI-PFAN in summary. I think it's obvious to us all that these early stage development and support tools are crucial to helping projects raise and access private sector capital. CTI-PFAN helps to accelerate that process. We're reducing the risk and the cost of the transaction for all parties, something that we're very proud of, and we're essentially, I think, helping more projects to happen in a faster timeline, in a more accelerated timeline than otherwise would be the case. And I think with that, I'm going to turn over to Taiki. Thank you very much.
Thank you, Peter. Next slide, please. As Peter mentioned at the outset, there are two entry points to receive CTI-PFAN services. One is unsolicited proposal submission for development pipeline induction, which can come in any time from any source. And the other is regional and country-based clean energy financing forums. I'd like to walk you through a typical clean energy financing forum process, which starts with the call for proposals issued through the CTI-PFAN network and the CTI-PFAN website. After careful selection process, CTI-PFAN consultant will be assigned to each and all shortlisted projects, and the intensive one-on-one coaching will start. At the beginning of the one-on-one coaching, project development and financing workshops are held to provide expert inputs to the selected project developers on the development and structuring of their projects and the preparation of bankable business plans and investor pitches from professional advisors, clean energy investors, and commercial banks. At the same time, various outreach activities to target projects and potential investors are conducted to increase the possibility of matching projects with necessary finance. The intensive one-on-one coaching will culminate in the financing forum to be held in business plan competition format. This forum process has proved to be a very successful tool for identifying promising projects and at the same time expand the PFAN network. Next slide, please. Currently, we have the third round of regional clean energy financing forum in Asia, which we call Asia Forum for Clean Energy Financing, or AFCEF3 for short. In response to the call for proposal issued in July this year, 40 project proposals were submitted from 12 countries, India, Myanmar, Indonesia, the Philippines, Vietnam, Togo, Bangladesh, Nepal, Mongolia, Thailand, Cambodia, Hong Kong. Out of those 40 projects, 18 has been shortlisted, which are mature enough to receive intensive coaching and have high probability of being ready to be presented to investors within a short period of time. These projects come from India, Philippines, Indonesia, Thailand, Tonga, Bangladesh, and Cambodia. In addition to the shortlisted projects, 12 projects which are less mature but have potential of being ready in longer term have been identified for possible induction to CTI-PFAN development pipeline. The project selection has been conducted by 3 experts using the criteria on the next slide, please. At this stage, the value proposition and the business model and the financials are weighted more than other elements of project proposals, as you can see on the slide. Next, please. We have just held the project development and financing workshop for AFCEF3 in Singapore on 9th of November. The workshop marked the beginning of the intensive coaching process and also provided an opportunity for project developers to meet their assigned coaches face-to-face for the first time. During the workshop, the project developers received in a group setting expert inputs and advices on how to prepare and present an investor pitch and expectations and requirements of investors and bankers, and also the key elements of a successful business plan. The interactive nature of the workshop was very conducive to sharing of experiences, and it provided a useful forum for the developers to interact and benefit from the views of the other participants from many countries in the region who are working on different but related technologies. The direct interaction between CTI-PFAN coaches and projects also facilitated understanding of the shortlist projects. Next slide, please. Based on the input received at the workshop, the shortlisted project developers will work on their first draft of business plan, which is due on 10th of December this year. Based on the criteria shown, 10 finalist projects will be selected. Next slide, please. There will be a couple of more rounds of review process leading up to the forum event on 22nd of February next year, which will take place at Concord Hotel in Singapore. But 2 days before the forum, we'll have a preparatory workshop to give the finalists an opportunity to do mock presentations in front of experts and receive feedback on in order to refine their investor pitch. At the forum event itself, which will be held in business plan competition format, each finalist will make a 15-minute investor pitch, which will be assessed by an expert panel of judges using 10 parameters to select the award winners. The panel of judges will be provided with a copy of business plan some days before the forum for advanced review and preparation. The judging of the competition will be based largely on the presentation and its immediate impact, however. After each presentation, there will be a round of Q&A from the judges. Next slide, please. At the end of after free process, the coaching outputs will include business plan, which is ready to be presented to investors, and the executive summary of the business plan, the project data sheet, which is essential for presenting to the investors, and the investor pitch PowerPoint presentation slides summarizing the business plan. Next slide, please. For those projects that did not make the AFSEF 3 shortlist, but is still of interest to CTI-PFAN program, a project induction workshop will be held on 21st of February, where they receive orientation and comparison in relation to the shortlisted projects. Once inducted to the development pipeline, these projects will be allocated CTI-PFAN coaches and receive same support in project development in a non-competitive or time-constrained manners. Once these projects reach a stage where their business plans are ready to be presented to potential investors, introductions will be made on an individual basis. Next slide, please. In summary, CTI-PFAN is experiencing a very strong growth in dedicated regional and country coverage, and we are well positioned to facilitate technology transfer inside and outside of the UNFCCC mechanism. CTI-PFAN adds value to both investors and developers by accelerating projects reaching financial closure. CTI-PFAN has very high financial leverage by raising $100 of private finance for every dollar of donor funding for program, as Peter mentioned. We are open for business and look forward to working with you as we make further progress in facilitating private finance in clean energy sphere. Next slide, please. So this is the contact address. If you have questions or any inquiries, please contact us directly, or unless you like to ask questions after this presentation. Thank you.
Great. Elmer, Peter, and Taki, thank you so much for those outstanding presentations. And we do have some really good questions that came in from the audience while you were speaking, so we'll use the remaining time to answer those questions and maybe have a little bit of discussion around those. Okay, first question, and Let me apologize up front if I mispronounce anyone's name. I am sorry for doing so. But the first question comes in from Benedict Muyal, who's in Kenya. And it's actually a two-part question. The first part is, in Kenya, which projects have you worked on? And the second part to that question is, he's asking that as an environmental consultant in Kenya, how could he be engaged in your projects in the East Africa region? Can everyone hear me?
Yes, sorry.
Okay. Oh, no, that's good. I just wanted to make sure. Go ahead.
No, I was just unmuting my my mic to be able to respond. I tried to speak without.
I've been there as well.
Let me see if I can respond to that. I mean, I think it was Benedict. Is that right?
That's correct.
Well, I'll start with the perhaps easier part of the question first and respond to Benedict's, inquiry about becoming involved in the network. And what I would suggest is that he makes contact with our country coordinator, whose name is Patrick Timber, who's the CEO of Africa Bioenergy, if I remember correctly the name of the company, who's based in Nairobi. We can exchange contact details through the Clean Energy Solutions Center after the webinar, I think that's the first entry in, and we can discuss as to whether Benedict's company is suitable for joining the network. And essentially we're open to all companies, investors and consultants that are active in this space for coming in and joining the network and getting involved. There's a little bit of a bureaucratic process to go through, which is not too painful, but does involve putting some documentation in place and signing into the memorandum of understanding I mentioned, and Patrick is the sort of entry point into that process, and we'll put Benedict in touch accordingly. In terms of the projects that we're currently working with in Kenya, I think that's probably one, because I can't remember all of them immediately offhand. We're working with a large number. I think the number of Kenyan projects is somewhere in the region of sort of 15 or 20 projects that we're currently working with in Kenya. So obviously the time that we have available doesn't allow us to talk to all of them in detail. They cover small hydro, biomass, waste to energy, biogas projects. They fall very much into the $1 to $50 million range that I mentioned as being one of our key criteria, and they're being developed by mostly private entrepreneurs and new renewable energy company and developers, of which there are a great many in Kenya and in East Africa just at the present time, which is very encouraging. And I think we'd be pleased to speak with Benedict offline, and it's something that Patrick can also help with to give him some insight into the sort of projects that we're working with.
Great, thanks, Peter, and I'll be happy to provide each of you with contact information subsequent to the webinar for further details or discussion on that. So thank you for that. A second question has been received, and again, forgive me if I'm mispronouncing the name, but Bjorn Fisher at EcoCraft has a question, and it is, in order to invest in renewable energy projects, is it generally required to provide co-financing by the industrial host slash project owner to reduce risk for the CTI-PFAN investor consortium? And again, this is a two-part question, and related as multiple revenue, oops, I'm sorry, my screen just went blank. So, and related as multiple revenue streams helps to lower risk, what role does carbon financing, such as CDM, specifically POAs, play in the overall viability of project finance? And if you need me to repeat that question, I'll be happy to do so. Yep, and that is the, that's,
okay,
that's the entirety of the question.
Okay, I'm not 100% sure I've understood the co-financing part of the question, the first part, but I'll try and talk to it, and if Bjorn wants to clarify while I'm speaking, then please do so. I think the response there is that you know, we're very different from other donor finance programs where you know, a criteria or a condition of acceptance is a co-financing element. It's not a requirement in the same way for us because we're dealing and acting in a different space. What I would say, however, is that you know, project developers need to have invested significant time, effort, and in most cases money in the development of their project for it to be of interest to us and for it to be applicable and suitable for the program. You know, we're looking at a project that for instance, has a total investment of $10 million. The developer, the project promoter, needs to have spent significant time and probably money in working on the development of that before bringing it to us. And ideally, either himself or through co-investors needs to be able to put some level of equity contribution on the table. Otherwise, essentially, you know, they're not going to be involved in the project going forward. We can and we have done in the past essentially sold projects on or worked as a pure broker of projects to other investor groups, but most of the time that's not in the interest of the developer or the project promoter, who, you know, has an idea, has spent some time and effort looking at it and wants to remain involved in the project as it goes through into implementation and to participate in the upside and the revenue streams of that project. But realistically, you're only going to be able to do that if you have either invested in or are able to invest in, at least to some level, in the equity of that project going forward. Now, you know, the level and the correct level of equity contribution depends from project to project and from situation to situation, and you can't make generalizations about that, unfortunately. So I think that's all I can really say about that, and I hope I've answered Bjorn's question. The other question was the aspect of CDM financing and how does that contribute, is that right?
That's correct. Mm-hmm.
Well,
basically, it's how does that play into the overall viability of project finance?
We do look at projects that are looking either through the certified or the voluntary markets at carbon finance. Generally, we find that carbon finance plays a relatively small role in the overall financing package and structure, though it can be an important one. We have had a couple of projects that have been able to leverage and pre-finance carbon revenues to support project development and completion of the project, pre-financial close, if you like, though those are very, very difficult and quite rare. And we are now seeing a lot of projects under program of activities, POA type structures, particularly in rural electrification, biogas, off-grid areas for distribution of efficient cook stoves, solar lighting kits, and so on and so forth. But again, the CDM or the carbon finance component is relatively small. Typically, it's sort of 3 to 5% of the total financing structure. There are some exceptions, but they tend to be in the biogas, waste to energy, and methane producing or treatment areas. So it's important. It certainly helps everybody. Investors that we work with tend to like to look at projects stripped of the CDM benefits and treat CDM or the voluntary markets, any voluntary carbon finance, as icing on the cake, if you like, additional revenue rather than core components of the project financing structure. And that's particularly the case just at the moment with the value of CERs very much, we hope at least, at the bottom of their cycle. I think they're about $2 a ton at the moment, which of course doesn't make much impact at all.
Great. Thank you again, Peter. Let's see, next question is from Prim Betty. And this question is basically describing a project and leading up to a question to ask if it's a type of project that would be of interest to CTI-PFAN. So I'll go ahead with the description and with the question and let you take it from there. And just one moment, my screen keeps jumping around. There's so many questions coming in. Okay, here we go. Tamir Microfinance Bank, which is one of the leading microfinance institutes in Pakistan, is now in a process to set up a renewable energy company. The company planned to reach 500,000 households in the next 5 years through small-scale renewable energy technologies such as solar home systems, solar water pumping, biogas plants, and improved cook stoves. They are looking for the investors for this initiative, and the level of investment that they are looking for is, again, my screen is jumping around, I apologize. 1 second, 1 minute, please. Let's see, investors in the initiative, the level of investment they are looking for is around $2 to $3 million US dollars. And then that description leads up to the question of, would this be an interesting project for CTI-PFAN, and if so, how could they move forward with this project? And again, I'm happy to repeat it.
Probably, I think I've got it. I'm going to ask also perhaps Elmer's support in this one, because I'm not so sure of our capacity specifically in Pakistan at the moment. But essentially, from that brief description, that's certainly a project that we would normally be able to look at. We haven't done work to date yet in Pakistan, and we would need to check our capacity there. So that might be an issue for us, but we have never previously had to decline a project on geopolitical for geopolitical reasons. So I would hope it would be something that we could look at. In terms of next steps, what we require is a project proposal. We have a sort of a template submission form for that, which we can send to, I didn't hear the name of the questioner in this case. You said Prim, I think.
Prim Sudetti. And again, I'm happy to share the contact information.
We can get that process started after the webinar. so he has the documents and can submit accordingly. But Elmer, can you perhaps just shed any light on Pakistan for us?
I think that's a very good next step, is basically getting a submission on paper so we can get a little bit better feel for this, and we can address the country issue at the same time.
Terrific. Okay, great. Well, I'll be happy to share contact information and help move things forward within my own capabilities. So thank you for answering that question. Let's see, I'm just doing a quick time check. I think we have time for a couple of more questions before we end. The next question comes in from Vanita Kanwal. In India, her question is, in India for financing energy efficiency projects, how do problems regarding no collateral or security deposit, how can that be resolved if financing has to be done from financial institutions? And the Bureau of Energy Efficiency will be giving guarantee to those projects, but still what should be the financial IRR on the basis of whom the project should be selected?
I've got a horrible feeling that this is for me as well. Without knowing some more details, it's very difficult to speak to that level of detail. I think we fully appreciate the difficulty of collateral. We know it's an issue in many projects, particularly in smaller projects in rural areas in India. I'm not sure that we've got, unfortunately, a silver bullet solution for you or for anybody else. But again, what we can offer to do is to have a look at the proposal and see if it's something that we can help with and help structure in any way. And I would also just mention that the BEE is an institution or an agency that we know very well and have worked with in the past successfully. So we do have some experience in that area, but this is a perennial issue, the problem of collateral, and it would be wrong of me to say that we've got a magic wand or an automatic solution for you, but we can look at the project and see if there's anything that we can help or do.
Okay, great. Okay, let's go for one more question from Joseph Fernandez, asking what is the expected return CTI-PFAN investors look for and over what time frame? And second part to this question, what would be the customary exit strategy? And there's a couple of follow-ups, and I'll just go through those real quick while you ponder that question. He mentions trade without borders, and what is the floor and or ceiling for investment amounts CTI-PFAN would consider?
Okay, I'll try and talk to that. So the first one was, what's the return criteria? And as much as I dislike saying this, there's no answer to that question. It depends from project to project, and part of the value that we add to the process is being able to look at the project with the developer to actually assess the return potential of the project and then to match that return potential with the right investor. And that's a core part of the process. And because of that, or sort of as the other side of that coin, we work with a huge range of investors. We work with investors that are, what I would characterize them as philanthropic investors, the impact investors that I mentioned in the presentation, through to sort of extremely commercial private equity, hedge funds, and venture capital type investment, and pretty much everything in between. So we can really, for a very wide range of projects and return criteria, match the potential project or the project to the right investor, and that really is one of the, I think, big value adds that PFAN brings, being able to do that. We know what particular investors are looking for in terms of return. We know the sort of projects that they're looking for, and we take a lot of the pain out of the investor search for the project promoter. And we find that it's one of the areas that the project developer and promoter is least comfortable with, is least well equipped to do on his own or her own, and where they most require help. And it can be one of the most damaging things to go to the wrong investor, sort of thing. So if you've got a very low returning project, you go to a venture capitalist, or vice versa. If you've got a very high returning project, you go to a philanthropic investor. They're just not interested in you, and you very quickly, one, get demotivated, and two, find yourself having to go through the wrong hoops. So I think that's really what I would like to say to that. There is no one return criteria. It does depend on the project, and we work with the project developer to understand the return dynamics and then match them to investment accordingly. So that was the one aspect. The other one was the size of investment. Vicky, was that right?
Yes. Verify that real quick.
Yeah, that's what it was.
Yes, it was. I found it. Okay.
We don't really have a hard set lower and upper limit. As I mentioned in the presentation, we tend to work with projects that have a total investment volume of between 1 million and 50 million US dollars, or any currency equivalent. We do work with smaller micro projects under the $1 million mark, and I think the smallest amount of money that we've raised, actually successfully raised for a project, is about $85,000. But we don't do so many of those smaller projects for obvious reasons, and we have worked with bigger projects. I think the biggest project in the portfolio at the moment, or in the development pipeline, is somewhere in the region of $600 million for a large wind project in Kenya. But I think where we feel most comfortable and where we feel we add the most value is in that bracket between 1 and 50 million US, or currency equivalent. I think there was another part of the question which I've missed, so if you could repeat that, Vicky, I'd be happy to do it.
See, what should be the financial IRR on the basis of whom the project should be selected? I believe, actually, it looks like you covered that question in full now that I'm reading through it.
Okay.
Yeah, and Elmer, Peter, and Taki, I have several more questions, but I do want to be mindful of the time we have scheduled for this webinar. So would you be willing, would it be okay for me to email you these remaining questions with contact information from the requester?
Sure.
Fine.
That's fine.
And again, now that we sort of put it in context, that it's important to sort of get some basic information. If it's project-oriented questions, you might want to sort of follow the template on our website.
Thank you so much. It sounds like we lost Vicki just at the very end here. So thank you. I'll step in here. This is Heather Stafford from Confluence Communications. I'd like to, on the behalf of the Clean Energy Solutions Center, I'd like to thank you all for participating in today's webinar. We've had a great audience and very much appreciate your time.
Oh, thanks to the audience.
Yes.
Oh,
thank you.
hello. Can you still hear me? I'm sorry.
You're back.
Oh,
okay.
yeah. I lost audio for just a moment, but I apologize.
So go on ahead, Vicki.
Yeah. I just wanted to ask Peter and Elmer and Taki, there's still several questions left in the queue, and would you be okay with me emailing you those questions so that you can respond to the requester by email?
Yes, when you asked that question the first time, we answered in the affirmative that we certainly would be pleased to receive those.
Oh.
My one qualifier was that if in fact that they're project-oriented questions, that we referred to this template on our website, that might be helpful to give a little more structure to the question.
Oh, absolutely. I will be happy to do that. So I will send you a few questions and follow that instruction. And thank you for doing that. So were you starting closing remarks, Heather?
Yes, but you should go right ahead.
Oh, okay.
I didn't get very far into it, so go right ahead.
All right. Well, I just really want to thank our panelists today for this terrific webinar. You've provided some terrific information that has obviously, from my question panel, generated quite a bit of interest. So I want to thank all three of you. And if you have any final or closing remarks you'd like to make, feel free to do so now.
Thanks to those who signed up for the webinar. We hope it provided some useful information.
And I would say that you have. So just real quickly, I'd like to state that on behalf of the Clean Energy Solutions Center, I really want to thank everyone in our audience for participating in today's webinar. You've been a great audience with great questions, and we very much appreciate your time. And I invite all of you in the audience to check the Solutions Center website frequently. And over the next few weeks, if you'd like to view the slides and listen to a recording of today's presentations, if you missed anything or would just like to go back and refresh what you've heard, we'll have those, we already have the slides posted, but we'll also include an audio to accompany the slides, and that will be included over the next few weeks. And also you can go through and view webinars that we've held previously on other clean energy topics. So additionally, you will find information on upcoming webinars and other training events. And we also invite you to inform your colleagues and those in your networks about Solutions Center resources and services, including the no-cost policy support. And it's, you've heard about two great features, both through CTI-PFAN and through the Clean Energy Solutions Center today on no-cost support that can be provided to you. So with that, we'll bring this webinar to a close, and I hope that you have a great rest of your day. And we hope to see you again at future Clean Energy Solutions Center events. Thank you.
Thanks to you.
Good night, everyone.
Good night. Good day.
Good day. Good morning.